Finally, some good news. I hope you guys find this encouraging. I'm pretty encouraged, and I'm certainly encouraged by what history tells me. A 30-year presidential cycle does pretty well. Pretty encouraged about seeing inflation finally going down. It's been a long, painful, and depressing year, quite frankly. But these years happen from time to time. Hey guys, Omar Khan here from Theta Trading, and today's topic of conversation is finally some good effing news. Now, what exactly does that mean? We'll see. Now, before we do that, if I could ask you guys a huge favor, if you can hit that like button, consider subscribing to the channel, hit the bell notification if you want to be notified for future videos. We release these on a regular basis. I hope you enjoy them, I hope you find them useful. And also comment, what would you like to see in the future? Now, let's get into today's topic of conversation. Finally, some good effing news. All right, so what does that mean? Well, we've talked about it on this channel, and you probably heard about the news. What the markets have been looking for, the stock market, is good inflationary data. Meaning, prices don't keep going up and up and up and up. That's what it's been looking for, okay? And so, we finally had some good news Thursday morning. Now, that would be Thursday, November 10th, okay? So, what happened? Something called CPI came out, Consumer Price Index. Now, that measures a basket of goods and services, and it measures how much prices are going up or down, okay? And what we've been battling and why the stock market has been horrible this year, performance-wise, has been because of this rising interest rate environment. And also, it has taken a massive toll on the real estate market. Again, rising interest rates. So, both markets are looking for a little bit of relief on inflation. Therefore, the Bank of Canada or the Federal Reserve doesn't have to keep increasing interest rates. That's what they're looking for. Banks around the world. Now, let's take a look and see what happened with consumer prices. So, this is an article from CNBC. Consumer prices rose 0.4% in October, less than expected as inflation eases. Now, that was the headline, okay? Now, we've still got a hell of a problem on our hands, inflation-wise, okay? Consumer price index increased 0.4% for the month. So that means from this month to last month, it went up 0.4%. So everything you paid for, you're paying 0.4% more, okay? From just last month alone. From a year ago, we're still up 7.7%, okay? Now, excluding volatile food and energy, which we have to pay regardless, so unless you are off the grid or are self-reliant on food, you got to pay this stuff. Okay, now that increased a little bit less. 0.3 and 6.3. It's starting to show some pretty good signs inflation-wise, okay? Now, the number is still very, very high. Now, the Federal Reserve wants this number to be around 2% inflation, okay? So you can see we are still a long, long away. Now, here's something I want you to take note of. You look at the year-over-year change in the Consumer Price Index. Going back to January of 2020, it was at 2.5%. And then COVID hit, we went really low. We have almost no inflation back then, okay? But then we printed a lot of money. Why? Because COVID basically derailed the entire economy. So we printed and printed and printed. Not we, meaning the central banks around the world printed. Okay. That led to all kinds of inflation, which reared its ugly head into the economy in 2022. Now, the reason it wasn't a huge concern in 2021 is the Federal Reserve, and specifically Jerome Powell, kept saying that it was transitory, meaning it's not going to last long. It's just a little bit of inflation. Don't worry, it's going to go away. And then come this year, he's like, oh, you know, I was totally wrong. We got a serious problem on our hand. We got some serious inflation going on. We got to raise interest rates. Lickety split. And they did. Okay? And they still are raising rates. But finally this year, inflation looks like it's easing, and those interest rate hikes are having their intended effect. Inflation peaked in June of 2022 at around 9%, and it's been slowly easing off since then. And now we just had our last reading at 7.7. Now remember, the Federal Reserve wants to get down to 2%. There's a long ways to go between 7.7 and 2, but what it shows you is it's headed in the right direction. These interest rate hikes, as painful as they have been for consumers, for investors, at least they're having their desired effect, and that is encouraging for the market. So, the stock market is a forward-looking mechanism. It's going to price in today what things going to happen in the future. Let's say 6, 12 months from now. Now, if it sees inflation is finally easing, then it's going to say, oh, great, the central banks don't have to increase interest rates. People will be more comfortable spending money again. The economy can start maybe opening up again. Corporate profitability won't be as affected. All these things are viewed as positives because the expectations right now in the stock market are so low. Okay? Now, what this does not mean is this does not mean interest rates will still not keep going up. Remember, we're still at 7.7% inflation. Okay? You can see it. Gas, food, clothes, vacations. You can see it everywhere. They want to get this number down to 2%. There is still more pain to come. However, the good thing is it's headed in the right direction. Now, what that did is, yesterday we had about a 1,200-point rally on the Dow Jones. That's the most looked after. And the NASDAQ was up 7%. What the stock market was looking for was good inflationary data. It got some good news, finally, because every inflationary data read we've had this year, it kept showing inflation's going up, 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 up. It's not abating. That's a problem. And the markets get spooked out. Look, how much more do they have to increase interest rates? They got to keep going. They got to keep going. And then all of a sudden you get some good read like this. And there's relief all of a sudden because there's such a bad case scenario already built in the stock market. Finally you get some relief. Inflation is not as bad. It's coming down. And what does the stock market do? Biggest rally in 2.5 years. It was waiting on this news. Now, if this news keeps coming like this going forward, we would expect hopefully the stock market to rally. Now, my previous video, we talked about what happens the year after a midterm election. Well, what happens, generally speaking, is the stock market, the year after a U.S. midterm election, on average has returned about 19% for the next year, the third year of a presidential cycle, since 1950. And it's been positive 100% of the time. So 100% of the times since 1950, the returns have been positive. Okay, I'm going to show that. Now, take a look at this graph. You'll see what I mean. Since 1950. That's a big, big time span. Okay, so what this is telling us is that we got some really good seasonality in our favor. Finally, we're starting to get some good news on the inflation front, which the stock market loves. Inflation is still a problem. We're still at 7.7, but it is trending downwards. Really good sign for the stock market. Now it's at 7.7 currently today, okay? Year over year, 0.4, as we discussed, month over month. We have to get down to 2%. So what this does not mean is this does not necessarily mean that interest rates will not be going up more in the future. What it does mean, however, is finally we got some good news, meaning maybe the desired effect could come faster than anticipated, and hopefully then we won't have to have a whole lot more interest rate hikes. And if inflation really comes down pretty quickly and the economy gets really bad, well then the Federal Reserve may even have to cut interest rates. We don't know yet. So there's still a lot of uncertainty going forward, but we finally had some good damn news. And it was a long time coming. So if we continue to get this good news on a go-forward basis, I expect the market to rally. Now, I'm doing this video on Friday, November 11th, and in the last 2 days, for example, the NASDAQ is up around 9%. It's a big number. A big number. S&P is up huge. The Dow is up huge. The stock markets around the world are up huge because it was waiting for this one piece of data. Now, if you're a stock market investor and a real estate investor like myself, what this could mean to you is this. Stocks being a forward-looking mechanism could rally significantly going into next year, especially when we talk about that third year of the presidential cycle. That may give you an opportunity to take some money off the table in the stock market and look at reallocating some of that money into the real estate market, as it should still be down because it's a lagging indicator. It's still going to feel the effects of future interest rate hikes yet to come. Now, eventually, if those interest rates go down or stabilize, then the real estate market can really benefit from that. But for now, rates are still most likely headed up. So guys, finally some good news. I hope you guys find this encouraging. I'm pretty encouraged, and I'm certainly encouraged by what history tells me. A 30-year presidential cycle does pretty well. Pretty encouraged about seeing interest rates, inflation finally going down. It's finally going in the right direction. It's been a long, painful, and depressing year, quite frankly. But these years happen from time to time. And what will happen in the future is you won't view these as, horrible moments. You'll start to view them as opportunities because you'll know what to look for. And one thing I will say, if you look back at this time frame, right, and we're here sitting in November of 2022, you're going to look back most likely in a year, 2, 3, 5 from now, and you're going to say, wow, do you remember when this stock was that cheap? Or that stock was this cheap? Because I remember from the various bear markets that I've gone through. I look back at 2008 and 2009, 2001, 2002, and now this is my third real big bear market. And every time I've looked back and said, wow, can you imagine that stock was that cheap? The stock market generally tends to be very irrational on the upside and the downside. And that's where that fear and greed comes in. So we finally have some good news. But in the future, look to view these as opportunities. If your favorite stock is on sale and you love this company, think of what that could mean. So I'm really encouraged about next year, guys. I hope you guys enjoyed the video. If you guys want to see anything more in the future, please let us know in the comments below. And please join us next video. Until next time, take care.